recent data we've received started to tell us that the Canadian economy is slowing, and actually slowing possibly quicker than we anticipated. Recent data we received regarding second quarter GDP or second quarter growth actually told us the country's not growing at all. In fact, we saw our first negative number or negative growth, just negative 0.2%, but still negative nonetheless. We also saw a revision of first quarter GDP. Originally, we thought GDP came in or growth came in somewhere around 3.5%, and they revised that down to just 2.6%. So right now, we're kind of hovering just above 1% growth for the year. Maybe that's not a surprise to most people, as the Bank of Canada did say that they anticipated a growth rate of about 1% in the second half of this year. So we're kind of right on target there. However, if we do get a third quarter number that is slightly negative or in the red, that would be 2 negative quarters of GDP or negative growth, and that would mean Canada would be in a recession. Now, it may be a mild recession, but a recession nonetheless. And for most of us, if Canada is in a recession currently or about to enter into one, probably doesn't feel like a recession. You know, I talked to a lot of people and they mentioned the R word. They're even afraid to say the word recession. They call it the R word. And for them, it's very bad. And of course, being in a recession is not good. However, when everybody is working, or the majority of people are working, we have unemployment still at pretty close to all-time lows. It doesn't feel as bad when people are earning a paycheck and are able to spend money. Even though GDP or growth may turn slightly negative, it doesn't feel as bad as when everybody's working. So why did GDP turn negative? Well, our first chart that we have here, a breakdown of GDP, Canadian GDP, you can clearly see why we actually ticked negative or slightly negative for the second quarter. And you have up on top there, gross domestic product turning negative. And you can see here that a lot of it had to do with inventories. We saw, I guess, a lack of buildup in inventories. Whenever you build up your inventories, whenever businesses build up inventories, that's a good thing for GDP. We also saw imports, a slowing down of imports, which is good for our deficit, but not good for GDP as well. So the negative 0.2% came as a bit of a surprise. I know Bank of Canada was anticipating a number of just above 1% growth, and they got a negative number. We have a second chart here on GDP and how much GDP has moved, or how much the growth rate in Canada has moved. And you can see how high it was coming out of the recession, right? When we first opened up, obviously things were going like gangbusters coming out of a shutdown. But as you start to move to the right on this chart and start to see numbers, July 2021, you could see that we had a negative print on growth or GDP, pop back above the flat line, and really has been fluctuating between 0 and 2% for quite some time now. And right now, it is ticked just below the flat line point. So going forward, what do you expect? What does the Bank of Canada expect? Well, I think they continue to expect things to slow down. That's what they want to see. And of course, if they don't continue to see a slowdown in growth, then that will be maybe a cause to raise interest rates once again. So overall, I think from our perspective, from an investor's perspective, we kind of want that Goldilocks scenario, right? We don't want to see a recession, even if it is mild, but yet Bank of Canada doesn't want to see a lot of growth. So we kind of want to come in somewhere in the middle, kind of walking on eggshells, right? That's what the Bank of Canada is trying to do. Initiate a slowdown, but not too slow, so that we go into recession and people really start to feel the pinch. So going forward, I think it's very important to keep an eye on what our numbers look like, what our monthly numbers look like, what the overall quarter looks like, and to see if we will get a second negative quarter of GDP, which unfortunately would mean we are now in a recession. I think the Bank of Canada is not anticipating this, but we'll see what happens in the coming months ahead.